Hello everyone, welcome to the Ichimoku charts.com daily analysis for light through crude oil for Tuesday, October 30, 2012. Well, no change of trend in this market today. The previous trend was to the downside. We had a candle 2 trading periods ago that made a lower high and a lower low, continuing that trend to the downside. Previous day's trading we had in bar chart terms an outside day, and today in bar chart terms is an inside day. It does suggest that there is potential for a change of trend to the upside because the buyers weren't strong enough to take out the previous high, but the sellers weren't strong enough to take out the previous low. So a very indecisive candle, and not the type of candle that you want to see at the end of a downtrend, but certainly no sign of a change of trend. Now this is a spinning top type candle, another candle of indecision, so there is potential for a change of trend to the upside. But the worrying thing here is that after this strong trend, we haven't trend to the downside. We really haven't seen any strength from the buyers, and they haven't managed to probe up outside of the this zone of support and resistance highlighted in yellow that extends up to about the 87 level, and that level is crucial if the market is going to begin trending up. Now with this market congesting, we can draw some type of a pattern here. It resembles a wedge type pattern, and we are in a downtrend. We have a downward sloping wedge, and this does suggest that there is a possibility of a reversal here. Generally, wedge patterns can be either continuation or reversal patterns. The wedge patterns that slope down when you're in a downtrend tend to have a more likelihood of being a reversal. The wedges that slope up in a downtrend tend to be continuation patterns, so the breakout would be to the downside. Here it's a high, well not a high, but a more likely probability that there could be a breakout to the upside. But having said that, certainly the important thing with all patterns is to wait for the breakout, and the breakout is actually a close above or below the boundaries of the pattern, not just a test above or below, but a close, and that's really the only thing that determines the direction of the breakout. So we can say all we like about downward sloping wedges in a downtrend, that they're more likely to be reversal patterns and the breakout will be to the upside, but certainly it doesn't mean anything because we need confirmation of that pattern. So if we do see the breakout to the downside, obviously this will be a continuation pattern. If that does happen, we'd like to see a bearish breakout to the downside, but we have strong support at the 83-85 level. If we see the breakout down below there in a bearish manner, then certainly it would be significant. We could quickly see the market trading down to 81. If we see a strongly bullish breakout, strong close up above the barrier here, then the market will need to trade through 87, and if we see continued bullishness up there, then there is potential for the market to trade up to 89. Now in terms of the Fibonacci extension, nothing new happening here. The market is still in this downtrend, and we have traded through the 161.8% level. The next target we have here is at 83.86, which is the 261.8% level, and it coincides with that strong support level at 83.85, roughly within that area. With the Fibonacci retracement, also we've traded through the 161.8%. The 261.8%, the target for this market is at 83.80, coincides pretty much exactly with this support level at 83.85. So if we do see the market test down to that level, if we do see strong price rejection to the upside coming in, then there is potential for a change of trend back to the upside. In terms of Ichimoku, we have a bearish market in all 3 time frames, and that does suggest that there's probably a likelihood of the market breaking out of this congestion area to the downside, because the overall trend in big picture terms is down because we're trading down below the cloud. The market's also trading down below the Kijun-sen and Tenkan-sen, so it's bearish in the medium and fast term time frames. And if we look at the Kijun-sen, that's pointing flat, and that tends to attract price action back towards there when we have a flat Kijun-sen. Now the important thing here is that when we've had this flat Kijun-sen, we haven't seen any strength from the buyers attempting to rally. and the rallies have been short-lived and very weak. So that does suggest that the buyers really don't have too much strength in this market, and it does suggest that there is a strong possibility for a breakout back to the downside for this very strong prior trend to continue back on its way. But we do need to be patient. We now have this congestion area forming within this zone of support and resistance, and we do need to wait for a breakout in either direction above or below the 87 area or below the 83, 85 level.